Hi subscribers, welcome back to the channel. My name is Dominic James Murray, CEO and founder here at Cameron James. Okay, today we're going to be diving into the topic of QNUPS, qualifying non-UK pension schemes. Okay, now this is probably a new topic for some of you in comparison to SIP and to a lesser degree QROPS, which you may have heard of before. And to start off for QNUPS, I'm going to go straight to the UK website. Interestingly, you can see here, this was updated as of 6th of April 2025, QNUPS for the government website, comes under inheritance tax. And that gives you a clear indication as to what QNUPS are actually connected to, which is really tax. They're not actually a structure in themselves, it's much more closely connected to tax. So, as we can see here, a qualifying non-UK pension scheme, QNUPS, is entitled to the same inheritance tax treatment as a registered scheme, but will not necessarily provide similar pension benefits or be structured in a similar way. Now, QNUPS actually started in 2010 and obviously came from the UK government legislation. Now, what's very interesting with QNUPS is they differ dramatically from, say, a QROPS or a SIP. Whilst the name may be very similar to QROPS, a SIP and a QROP is where typically UK pension assets will be transferred to. SIPs, very common in the UK. Non-UK resident SIPs, also common outside of the UK. QROPs were extremely common outside of the UK. As of 2015 and more recently for Europe as well, those have been limited in terms of the overseas transfer charge. But a QNUPS, interestingly, you cannot put UK pension money into a QNUPS. So whilst it has the name pension in it, it's actually nothing to do with UK pensions. Now, for anybody living inside the UK or potentially outside of the UK, QNUPS can have a large range of additional benefits. Now, as we move on to when we're talking about the benefits, probably the key benefit of a QNUPS is tax efficiency. Okay, so you can't put UK pension asset money in there. You can't contribute it and get tax relief from the government or whatnot. It's literally a non-UK pension, but you can have tax efficiency from an inheritance tax planning perspective. Now, fast forward or fast backward to autumn budget 2024, the non-UK residents or long-term non-UK residents, QNUPS are becoming an interesting talking point at the moment. The industry is almost a little bit split as to which way they think QNUPS are going to go for long-term non-UK residents and whether they would form part of one's estate for an inheritance tax planning from April 2027. Now, when you have leading tax experts and advisors unsure on this and still waiting for further clarification, it goes to show to you into a very niche area of financial planning. One of the other great benefits or key features of QNUPS is the investment flexibility. Now, with a UK pension pot, you're obviously limited what you can invest in. Stocks, underlying funds, that's about it. You can also have a commercial property SIP, etc. But generally speaking, SIP's pretty run-of-the-mill. Inside of QROPS, okay, you have a little bit more access. You can hold a lot more worse products than what are available inside a SIP. With a QNUPS, though, entirely different. You can hold all sorts of things. Property in the UK, property outside of the UK, lots of different property and all other different types of assets. But in that capital coming into the QROPS, there could potentially be a tax charge, which you need to be very careful of. A very important thing for QNUPS, which typically makes them more suitable for wealthier individuals, is there's no contribution limit. With a SIP, you all know what your contribution limits are per year, £60,000 or 100% of your income. You also have lifetime allowance at 1.073 million to contend with. So SIPs have like a finite ability to help people be more tax efficient. Interestingly with QNUPS as well, they're very portable from an international perspective. So whether you're moving abroad, a QNUPS can continue working with you. What I'm going to move on to now though, is some of the potential drawbacks with QNUPS. Now, QNUPS can have significantly larger initial charges in comparison to say something like a SIP, which is pretty low cost or even free in terms of setting up, or a QROPS, which can also have ongoing charges or annual charges more than a SIP, but very often speaking, a QNUPS will be the most expensive. They're also very complex from a regulatory point of view, and you really need to understand what you're doing. Anybody who opens up a QNUPS is not a short activity and just say, right, I'm going to go and stick in millions of pounds into it. You have to be very, very careful with the planning you do. And whilst here at Cameron James, we're not authorised and regulated tax advisors in the UK or anywhere else, we have specialist tax advisors who are familiar with UK, non-UK, expatriate residents, or even the country you're a resident in, specialising in providing advice to these people. Now, this has become increasingly important. And to be transparent, if a client wants to use a QNUPS, they can use a QNUPS. But typically speaking, we would always advise our clients to try to get tax advice at the same time of doing that. Now, this is where I advise you to be very careful. Do not get free tax advice. You can't get anything else for free in life. You can't fix your car for free. You can't clean your house for free. You can't do anything for free without paying somebody for it. Why people think you can get free tax advice from people who have studied for years and have professional indemnity insurance to pay for free is just laughable in my opinion. There are a lot of financial advisors out there who, I call them sheep in wolf clothing or whatever the phrase is, who are masking themselves up to be tax advisors, but really they're just financial planners. They have one tax advisor in the office. Always get independent tax advice from somebody who you pay a fixed fee to, irrespective of whether you complete the financial planning advice report or not. That then means you avoid the opportunity of being taken advantage of, and I've seen that happen many times over the years with tax advice. So the other thing that obviously is a drawback of QNUPS is you can't put contributions in there for an employer. So if you run your own LTD or you've got big UK pensions somewhere else, those cannot come in. So it's not a tax efficient tool for saving from your salary. And the way you can think about QNUPS really, it's for money that's already been taxed. If the money's in your bank account, if the money's in a property, if the money's wherever it is or the asset, you have it inside your estate, you should have paid tax on that money at some point in your life, whether that be high rates of tax in Europe or UK, or possibly tax-free status when you're in places like the Middle East and Dubai. The other big drawback with QNUPS is regulatory changes. Now, a SIP is pretty run-of-the-mill and pretty bog standard. You might get your allowance increase, you might get the allowance decrease, but the UK government is unlikely to make sweeping changes to QROPS, whilst QNUPS is obviously not necessarily something used by the masses. It is typically used by people who have a little bit more money and a little bit more wealth, and as such, pension legislation changes can be a little bit more sweeping at times. So I think the conversation with QNUPS, if you're watching this video and you're thinking, okay, it may or may not be suitable for me. I've had conversations with people before. I've even spoken to tax advisors before. It's complex. Get in touch and have a conversation with ourselves. Here at Cameron James, any QNUPS recommendation we put together for you, it's not a defined benefit asset. As such, it's a defined contribution in terms of how we would write our report. Not technically correct in terms of defined contribution, but it allows us to put the advice report together for you for free, without charge, for you to understand clearly what our advice would be. But as I mentioned, we are not going to be providing you with tax advice. We'll provide you with tax guidance, tax information, all the websites where you can read about QNUPS and their tax status, benefits, drawbacks. But if we need, or if you need to get tax advice, we will always advise you the correct partner to get the tax advice to ensure if you're going to go and drop $1 million, $2 million, $5 million, I've seen 10, 20 million for QNUPS before, you should make sure you're getting correct tax advice so that at the point in time, if and when your beneficiaries have to go for probate in the UK, you at least have a letter on file from a company that obviously is qualified to have given you that advice in the first place. And if you have any questions at all or you want to speak with us, you can get in touch below using the calendar link to find a day and a time which is most suitable for yourself. And as always, take care with your UK and your non-UK pension assets in this example.